Retirement accounts have transformed the investing landscape significantly over time. Tax wrappers and index funds play a crucial role in this transformation process. Understanding the basics of retirement accounts is essential for investors today. Automatic contributions have made it easier for people to start investing early. A long time horizon allows investors to ride out market fluctuations smoothly. Index funds provide broad diversification and reduce individual stock risk effectively. Tax wrappers help investors save money on taxes and maximize their returns. Personal finance planning involves setting clear goals and risk tolerance levels. Investment charts and data analysis help investors make informed decisions quickly. Retirement paperwork and planning can be complex without proper guidance available. Modern technology, such as automatic savings apps, has simplified the process greatly. By leveraging these tools and strategies, investors can achieve their retirement goals. Index funds emerged as a low-cost alternative to traditional investment options. By tracking a specific market index, they offered broad diversification benefits. Automatic contributions to these funds further simplified the investing process. Tax wrappers, such as 401k and IRA accounts, provided a sheltered environment. Within these accounts, investments could grow without immediate tax implications. Long-term focus and disciplined investing became key to successful retirement planning. Time horizon played a crucial role in determining the optimal investment strategy. Retirement accounts incentivized investors to adopt a buy-and-hold approach. Low-cost index funds helped reduce the impact of fees on investment returns. Diversified portfolios, constructed with index funds, mitigated risk and increased potential. Regular portfolio rebalancing ensured that investments remained aligned with goals. Through the combination of tax wrappers and index funds, a new investing paradigm emerged. Tax wrappers offer a shield against taxes, allowing investments to grow faster. Index funds provide broad diversification, reducing individual stock risk significantly. Automatic contributions to retirement accounts create a disciplined investing habit. Regular investments, regardless of market conditions, promote long-term growth potential. By leveraging tax-advantaged accounts, investors can accumulate wealth more efficiently. A longer time horizon enables investors to ride out market fluctuations smoothly. Retirement accounts, such as 401k, and IRAs, provide tax benefits and flexibility. Contributing to these accounts consistently can lead to substantial savings over time. Utilizing tax wrappers and index funds in retirement accounts is a strategic move. Investors can optimize their portfolios by combining these investment vehicles effectively. Analyzing market trends and adjusting investment strategies can further enhance returns. Ultimately, a well-planned retirement investing approach can secure a more stable future. Automatic contributions simplify the investing process significantly now. Index funds offer broad diversification and reduced management fees always. Tax wrappers provide a sheltered environment for long-term growth naturally. Consistent investing helps to reduce the impact of market volatility overall. Regular contributions can be made through automatic transfers easily. A well-planned retirement strategy incorporates time horizon considerations. Retirement accounts have evolved to accommodate various investor needs. Automatic savings apps have made it easier to manage investments remotely. Data center servers process vast amounts of financial data continuously. Startup teams develop innovative solutions for investment management systems. Personal finance planning involves setting clear goals and priorities initially. Effective retirement planning requires a thorough understanding of tax implications ultimately. Long-term thinking is crucial for maximizing retirement savings potential. Automatic contributions help investors maintain a consistent savings schedule. Tax wrappers provide a sheltered environment for investments to grow over time. Index funds offer broad diversification and can reduce overall portfolio risk. By starting early, investors can harness the power of compound interest. Regular portfolio rebalancing helps maintain an optimal asset allocation. A well-planned retirement strategy can help mitigate market volatility. Time horizon considerations influence investment choices and risk tolerance. Retirement accounts have evolved to incorporate innovative investment options. Technology has streamlined the investment process, reducing barriers to entry. Data analysis and AI-driven insights can inform personalized investment decisions. Ultimately, a disciplined approach to retirement planning can yield long-term rewards. If you enjoyed this story, please like the video and subscribe for more.